Hello and welcome to this Rivemont MicroCap strategy monthly update for March 2023. My name is Matthew Martin and I'm a portfolio manager at Rivemont. Before we begin, I must mention that this presentation is for informational purposes only. These are not recommendations or investment advice, and if I talk about companies during the presentation, Rivemont may hold positions in these companies and may trade on them at any time without prior notice. So as usual, we'll start with a snapshot of the Rivemont MicroCap strategy as at March 31st, 2023. So the assets under management in the strategy were 10 million. The annualized return since inception was 2.4%. It's down from the previous month. It was a pretty challenging month in March, and there's a specific reason for part of the negative performance, which I will tell you more about shortly. And it's also the same reason why the number of positions in the portfolio went down to 21 from 22 last month. And finally, the concentration in the top 5 holding was 53%, which has been fairly consistent in the last few months. So starting with investment strategy, first of all I'll start with the bad news. We have a portfolio company, a private company, Spaceful Logistics, that made the creditor proposal during the month of March. So essentially it's they're in the process of filing for bankruptcy. And this had a negative impact of about 3.5% on the unit values. So it's unfortunate. It's a company that we invested in 2020, and at the time the company was doing very well. Revenues were growing. They were able to raise capital at increasing valuations over time, but what happened is that in 2021 they decided to make a pivot in their business model, and in hindsight I still think it was the right decision, but it was probably poorly executed and more costly than they expected as well. And when they realized that they needed additional financing, we were in early 2022 when the stock market was starting a significant correction, and unfortunately they weren't able to raise the capital that they needed. So they had to cut expenses and reduce their staff, and they struggled for most of 2022, but they ended up being able to stabilize the situation in the later part of the year. But in early 2023 they lost two significant customers, and unfortunately couldn't make it anymore, so that's why they decided to file for bankruptcy. Now if we look at the bigger picture, in terms of investing in private companies, we still have a pretty good track record based on our first investment in We Cook Meals that ended up being close to a 4 times return on our initial investment. So we're still in positive territory in terms of investing in private companies, but unfortunately this one didn't live up to expectations, and I think we need to expect that if we will invest in earlier stage private companies. It's part of the game, unfortunately, and we'll have to move on and find better ones next time. Now for the rest of the strategy, we're still very active looking at public companies. We took a lot of calls with management teams and did a lot of research on new opportunities during the month. We still feel there are a lot of bargains out there. Valuations remain very attractive, and so we're still doing the work and being very active in terms of research. Now moving on to outlook. We had a few financial results for our portfolio companies during March. Actually, companies are starting to report their year-end 2022 financial results, and so in the later part of March and going into April, we'll see all the financial results from our portfolio companies. And so far, We're seeing good fundamental progress. We are not seeing any deterioration in fundamentals, even though some experts warn us that there might be a recession later this year. So far, so good. The companies we own are making good progress. We also had the 3 portfolio companies that received new analyst coverage during the month. And it's positive because typically the investment banks that cover all sorts of companies, not just microcaps, can go up to large caps. It's typically to provide more exposure to these companies and help them get discovered by institutional investors. So it's good for us because typically we try to find opportunities when they are so small that there is no analyst coverage yet or no institutional investors, and hopefully over time, as these companies execute and grow their revenues, profits and market cap, they get on the radar of investment banks and larger institutional investors. Fortunately, 3 companies in our portfolio are starting to get more discovered that way. And it also shows that there is still a little bit of institutional interest for the microcap space right now. And finally, just a quick word on US banks. For those who have followed the markets lately, you might have seen a pretty high-profile bank failure in the US from Silicon Valley Bank. And a few other banks as well have been struggling, but fortunately the Fed made a quick intervention and things seem to be under control. As far as our portfolio goes, no companies were affected by the Silicon Valley Bank bankruptcy. We're still monitoring the situation. Obviously, problems in the banking system are not positive. So although we're not seeing any direct impact right now, we decided to be a bit more cautious for the time being, and we slightly increased our cash position in case we could see another leg down in the market going forward. So that's it for the March 2023 update. I thank you very much for listening. I'll be back next month with more updates from financial results on our portfolio companies. And also I'll report back from our trip at the Planet MicroCap Showcase in Las Vegas. So enjoy the month of April, and I'll talk to you next month.